All has been relatively calm on the euro front in the last month or so, and I asked William Berridge if the common currency has finally turned the corner.
Well, I think we're very much at an inflection point right now, given where we are on the euro dollar. We've really moved higher quite dramatically. I mean, once we're in the early 120s, people weren't making too much of a fuss. But to rally all the way back up to 129 is quite a big move. So I think now the charts are pointing to a little bit higher, but I have to be a bit skeptical if this move will go any further.
Why do you think that the euro has rallied? Is it just a case that people are now more confident in it?
I'm not sure if it's just confidence in the Eurozone. I think looking at US Treasuries and how yields have really sold off badly, the 2-year under 0.6 today, I think that shows you there's a lot more pessimism about US data, and that worries about a double dip. So I think you can explain a lot of the euro-dollar move by slightly more confidence in the Eurozone and what they're actually doing. We wait for the stress test to see, but also with the weaker US data, which has had a big impact.
If we just stick to the euro for a while, there was a lot of negative news around the euro. Was it just a case that people just got sick and tired of bad news on the euro and they could only go down so far?
I completely agree with that. I think there was a slight data fatigue. I mean, how many times can you read the newspaper and read analyst calls saying Greece is going to get downgraded again? Case in point, Portugal downgraded another notch. Market didn't even flinch. It didn't matter. So I think there is a case in point that we've entered the summer now. We've had enough, and US data gives us something else to focus on. So I think the Eurozone takes a bit of a breather for the moment, which is what they needed, to be honest.
And if the euro does become very bearish, do you think the ECB is going to have to take some more extraordinary measures? Because obviously they started buying bonds. So do you think they're going to have to do more similar measures?
I think they'd want to be very cautious about re-engaging in another prolonged period of quantitative easing. I think given that the focus is not so much on them at the moment, more with focus on the US, I think they'd rather leave that as a last resort. But if we start going down again because of another crisis, maybe with the Cayas in Spain, it's possible. But I don't think that's quite on the table right now.
So do you think Spain is the main area of focus?
Yeah, I mean, Greece was 3% of the GDP. Spain is 10%. Add on Portugal as well, you've got a sizable chunk of the Eurozone GDP there. So I think that's more our focus rather than Greece. It's a small story.
But there was a fair interest in Spanish bonds recently. The Chinese entered the market again.
Correct.
Do you think that there is a certain amount of confidence there now that maybe wasn't there a few months ago?
Definitely there's more confidence. I mean, that's undeniable. We've seen the Greek auctions this week, the Spanish auctions which passed with high bid to cover ratios. So I think you've got to expect in the short term, for their short-term funding, there is more confidence. But I'll be interested to see once Greece has to go to the market or Spain has to go to the market to basically recover bonds at longer duration. They may have more of a problem there. The shorter duration stuff, I think there's much more confidence. There's a backstop.
As we said earlier, there's been a lot of focus on the US recently. There's been this flurry of bad data concerning the US economy. You think that the US dollar is going to be the next currency that's going to see a lot of bearish pressure, and maybe for a prolonged period? I don't know.
That is possible. I wouldn't like to speculate how too far, but given the sort of negative news, we've had negative ISM, we've had retail sales, we had the payrolls, which are disappointing. It's hard to find US data, even though corporate earnings seem okay, US data which is encouraging. And as such at Barclays, we've actually moved our prediction for Fed funds moving high until 2011 from the end of 2010. And so that will negatively be a drag for the dollar.
So Japan has its problems, US has its problems, Eurozone, UK all have their budget deficit problems. How is the market interpreting that at the moment?
Well, I think the market, in terms from an investment point of view, are actually focusing on smaller currencies. Aussie, Kiwi, CAD, the Scandinavian bloc. What we're seeing from the private side as well is a lot more interest in those pairs where fiscal budgets are not so pressing. Monetary policy is being normalised, so you're going to get some carry. And there's a lot more confidence about those sort of, especially the commodity block currencies as well. So you may get a situation where it's basically a race of small people, and euro, dollar, pound, and yen will do as bad as each other, but they will lose value on the crosses still.
So it's a case of people looking for safe places to invest, and Scandinavia, even Switzerland as well, one of those currencies where people are very keen to invest in.
Correct, and those currencies are not just safe haven status. Some of those currencies actually have growth, which is higher than what you'd get in the developed trend nations at the moment. So that's not a bad thing.
So it's going to be a definite shift in the short, and how long do you think this will go on for?
I think this could be a more structural shift. I think this could be actually a longer term shift. We could even be talking about reserve diversification, where Aussie, CAD, those sort of currencies start taking a much larger share in reserve managers' portfolios. We haven't seen that drift out of the dollar just yet. They've stayed stable about 65% if you look at the latest COFA figures, but I still think that's a possibility that those reserves could slowly drift away from the euro even and from the dollar.
Okay. And let's talk about some projections and forecasts. So what are your projections for the euro versus the dollar?
For the end of the year, we're looking at 125. We're sticking by that for the moment. And on sterling dollar, we're a bit more positive on sterling actually. We're looking for 160. And obviously we still like the short yen trade, even though it's being a very, very naughty person at the moment, the yen, but we still like seeing dollar yen higher towards 98 at the end of the year.
And just to finish off, everyone was talking about parity versus for the dollar and the euro a few months ago. Do you think that was just being a bit overly bearish, or is that something that's still on the cards possibly?
At some time in the future, I wouldn't be surprised, because that's a logical level for that to be. Euro dollar's traded at 0.8 to 1.6 range. Our PPP estimates make euro dollar about fair value somewhere between 125 and 130, so take your pick. I think we maybe got a little bit ahead of ourselves there, but could we go and revisit euro dollar parity in 12, 18 months? Quite possibly.
So obviously all be watching with interest how the euro fares in the coming months. Goodbye for now.